Hey guys, what was the last time you've taken a look at the market in Japan? And no, not for the reasons that you hear that are often talked about recently in the news. Hey, Japan is where all the money is going in. Hey, Japan is the market to invest. And guys, I don't share this optimism about Japanese stock market. The reason why we're looking at it today, because it's got a consistent history of letting us know a day or two ahead what's about to take place in the market in the United States. And it has very strong correlation with S&P 500. So basically, if we're to look at this chart and some psychological and behavioral aspects of what's taking place in Japan, it gives us another bearish signal that this is indeed the time to be going big shorts on the market here in the States. So if we're to take a look, guys, this is a bear reversal candle. And on that day, media was definitely covering this because, oh my God, the market in Japan, it sets all-time highs. It hasn't done it since 1989. Well, from the psychological perspective, I mean, can you imagine an average person in Japan and their level of enthusiasm about this level? Because what's happening is anybody that remembers the crash in Japan, basically the market sets a top on the last trading day of 89, and then literally it drops 30% after that. So the aftermath is still remembered to this day for many years, and it's been passed on from generation to generation. I mean, the new generation, when they talk to their parents over there, their parents are telling them, hey, this is why you went to public school instead of a private school. Okay, this is why we're driving a Honda instead of a Lexus. Okay, is because we went all in when the market was at all-time highs and we bought a bunch of calls back in 1989. And what happens next? The fucking market drops 30%. So I don't see many people, not the people that actually ended up buying the high tick of the market in 1989, but also the information they have passed to the new generation. And the new generation is trying to get to the market right now. Their parents, their relatives, they're telling them, hey, let me tell you a little story. How I had to file for bankruptcy in 1990 because I went and borrowed a bunch of money and I bought the market at the top because Leonardo wasn't posting the videos on YouTube yet about how it's not the time to buy the market at the top, how it's time to buy puts at the market top. And so I think the market in Japan is going to have a pretty strong resistance at these levels simply because of this psychological aspect. Japanese economy got hit so badly. And the real estate got hit as a result so badly that, it took 34 years to get back to this level. And I think the market is going to hesitate here. I would say the Japanese market's got a higher probability of going back to 33,000 than hitting 40,000 from here. So, but it's useful to take a look at the candles, because the market in Japan 2 days ago hit a high, and since then it had 2 days of a drop. So if we put a parallel to the market of S&P 500 and NASDAQ, most of the technology stocks, as I pointed out in the last video, they have just set the top over the last couple of days, which would be an equivalent of this. And what awaits us next? This red candle, well, by itself, this was a reversal candle here. So the market in Japan hits a high of 37, and the same day it drops 500 points from the top. It is kind of like the action. It's a move too. It's the action that you have seen in a lot of technology stocks today, right? They pump, and then by the end of the day, they completely roll over. And what happens on the next day? Look, it gaps down, and another red candle equivalent to another 400 or 500 points. And look what happens next. It dips again. So basically 2 days lower in Japan after it sets the top. Well, considering we set the top yesterday and today, we know next 2 days, based off this high correlation pattern in Japan, the market's going to go lower in the United States, guys. So this is just one sign, right? We've shown you 100 reasons why this is a market top, why on the 25th today is the day when the crash happens and begins, and it has not rolled over in a big way like it could have done today, but it's about to happen, guys. It is here. The crash is here, and there's just too many bear signs to ignore, and paying attention to Japan is just another element that helps you position yourself on the right side of the market. Don't be the person that was going all in on December 29th, 1989, buying the hell out of the market in Japan. You want to do exactly the opposite, is prosper. You buy puts with 13 market moves. Schedule a call, talk to a coach today. Visit 13mmtv.com. Study the hell out of our courses so you can interpret charts and make your own opinions in the market so you wouldn't have to listen to the news, guys. Let's roll big trading day tomorrow in the next 7 days. Make it big with 13 market moves. Let's go.